Hello and welcome back to a brand new video on the channel. So in today's video, we're going to do some 90-minute cycle timings and we're going to explain how to use these. These are probably the most effective way of understanding at what certain times a liquidity move is going to take place. So I've got a few examples. Obviously, within my mentorship and course, we go into a lot more detail of what certain cycles do, what certain cycles expand, what certain cycles consolidate. But for now, we're going to be looking at this example here. So this are 90-minute cycle times. So we have London, and this is all in EST time. So we have the first liquidity cycle where the DTCC release and the CLS release their funds, which is at 2:30 to 4 a.m. Eastern. And that is the example we're going to be looking at today. What I do want to take note from this is after we see one of these cycles, if we do see an expansion, it is more than likely that the next cycle will be a consolidation cycle, meaning that it will be an accumulation, and then we'll further on carry to the next cycle, which will be the liquidity cycle to take out that previous consolidation. So New York, we have 7 a.m. to 8:30 a.m., 8:30 a.m. to 10 Eastern, and then London, we have 2:30 till 4 a.m., 4 a.m. to 5:30, and 5:30 to 7 a.m. So in this example, we're going to start from the beginning. We're going to go from the 2:30 a.m. to 4 a.m. Eastern. And I'm just going to show you some examples. So we have Asia range here. So obviously you need to know your M15 buy side and sell side liquidity, but we can mark on Asia high just like so. So we have clear Asian low has been taken. So sell side liquidity has been taken within this certain format. Obviously on the high time frames, we may have came into an hourly, 4-hourly FEG, but for now, just ignore that because we're talking about the cycle times. So we have 2:30 till 4 a.m. So what you want to do, you want to grab your fib time zone. You then want to go from 2:30. So if we find 2:30, and then we go up to 4 o'clock. And what do we see price do? Again, we're looking to take an entry within our larger surface area of the boxes. This final point is usually where you'll see delivery. These two bigger zones are usually where you'll find your entries. So for this circumstance, we had a nice break of structure above here, market structure shift into this 3-minute FVG/order block. So we could have placed our trade within here, and then stops can go just below this fair value gap within here. Then our obvious targets would be the next liquidity cycle point, which is Asia high in this circumstance. So this was a nice 5-hour trade. And as you can see, price delivers perfectly. So as we get to 4 o'clock, we deliver perfectly into the liquidity. And that is the type of example that we're looking for to catch every day. Certain cycles have certain characteristics, but I can't explain everything about them in this video. This is just a basic video on understanding what times the cycles begin at. You can do some back testing for yourself, but if you do want to learn what certain cycles do what, and when we can expect consolidation and when we can expect expansion, make sure to click the link in the description and grab the mentorship, because I will be talking a lot more about this. I've been keeping this quiet for a long time now, and I haven't really spoke about it just because I do think this knowledge is probably worth a lot more than I'm selling it at. So that's the first example. So we're going to go into another example somewhere in New York. Okay, so we have a New York session example. So we have 7 o'clock, which is where the first New York cycle starts. And as you can see, again, we have a nice entry point. So this is actually from the previous day. So again, this happens every single day. So you need to be watching out for it. We have a nice pullback. We have the break of structure through this fair value gap, right? Explaining that we've had a market structure shift. We've then had this high get taken out within this wick and then close below. So we've had a raid on the highs. We've then broken through, left a fair value/order block. And then what does price do? Price melts through. We're then in our entry zone. So this is the ideal entry point for us on the liquidity cycles. So what we'd do, we'd put our stops either just through this order block within here. And then by the end of the liquidity cycle, we can expect some kind of sell side to be taken. So if we zoom across here, we have a nice 3-minute fair value gap. Obviously, you can target the major low, but this would have been the conservative take profit point. just under this fair value gap, because again, price could have expanded away from this fair value gap after taking it as sell side liquidity. And what do we see price do? Price comes in to our zone, our entry point, and then we see price melt off right in at certain timings. So as you can see how important the expansion is within the last two zones. We always see a big expansion within these last two zones into some kind of liquidity. Again, not every liquidity cycle will expand. Some will consolidate, but to find out which ones consolidate and which ones to expand, you will have to join mentorship because that is too precious information. Okay, so we have another example, and this is another 7 a.m. till 4 a.m. And why I like this example is because it's super clean. What we can see here, we've took out this low within Asia, come back into Asia midline. So that's an important part of this trade. We then have a clear Asia high, as you can see here. And what do we see price do? We see price expand and break above this level, meaning that there has been a market structure shift right before the cycle begins. The cycle begins, we expand up. We then can see price come within our entry zone again. Whereas if this isn't a fair value gap, we can take it as either a breaker block entry across from here. So we have a nice breaker all the way across. And this would be a very powerful breaker because we've expanded through. We've then came back in, and then we've took out our buy side liquidity in the form of Asia high. And I'm not quite sure if we had another high that we did actually tap in by the end of liquidity. As you can see, we did. This is what the liquidity cycle was targeting. We had a nice fair value gap within here. So as you can see, what happens? Again, we get the entry and we have our clear buy side liquidity. We can then take it from around the breaker block and stop just through 50% of this order block threshold. And then we can target that FVG. And as you can see, what happens? Price comes up, price reacts again in one of our zones. And then we finally take out the high that we were looking for within the final stages of the liquidity cycle. So always expect the expansion to occur at the end of the liquidity cycles. If it does occur beforehand, it's quite unusual. Most of the time, they're just trying to get all their orders in before the expansion occurs. And that's why you see some big moves play out at certain points, because it's coming to the end of the liquidity cycle, but they haven't took any liquidity yet. But other than that, that's just a few examples of the liquidity 90-minute cycles. And I hope you enjoyed. If you do want to go into more depth with this concept, please make sure to hop into mentorship, because I won't be explaining much more on this within the channel. Other than that, I'll catch you all later.